guys, good evening. Um, it's really been a long time. I had time to create a video, especially for my YouTube channel. I've been really busy. It's been hectic all the way. Um, Currently, there is a very big opportunity for anyone who is trading, especially trading the synthetic indices. I'm going to be dropping my overall view on the market, which would help you guys take the best decision and make a reasonable amount of profit from the decision. So this is volatility 25 index. You can see it here. So volatility 25 index. We click on it and we have it here. Now a new update was derivative just got added to trading view, so that's why you can see I'm trading with trading view here. So the first thing we do is we look at the chart and then we'll try to ask ourselves a question. What kind of a trend is this? What kind of character is this? So without any further explanation, you all know it is an uptrend. So we are currently in an uptrend. If I do something like this just to give you guys the bias, so you can see this is an uptrend. You get. So now what I'll basically do is we want to first of all understand the basic character of this market. You understand? So that will help us to be able to know what to expect from this market. You get. That is what will help us to know what to expect from this market. So on this one we have a break of structure there, and then so we have this as our break of structure, which is a nice break of structure, very nice break of structure. And now we have to understand what has been happening. I've always been trading with data, so we make use of what has happened to understand what we expect to happen. You understand? So now, that being the case, okay, we've got this as our break of structure, this as our break of structure, and this also. Furthermore, we have this high where price just dropped from, which is also cool. We'll remove this. So now, after having that information, now one thing I saw, or one thing I've seen here in this uptrend is this: price, anytime it comes into the order block, gets to rally to the upside. So you can see this one. This is our order block. The last bearish candlestick before the push. So this one is the last bearish candlestick before the push to the upside. So you can see when price broke structure here, price dropped down into this other block nicely, and from the other block it pushed up. Now we have the next one. Price broke this structure to the upside, it pushed back down into this other block, and then after pushing into this other block, it basically rallied again to the upside. Very nice. So we look for the next one. The next one is this. We have this other block here. So we have this other block also here. So now price is currently dropping in. So we expect when price gets into it, it will also rally to clear this high. Why? Because price has been doing that, and I think in all of that it uses 3 months to clear the next high. This one got in. Okay, so 3 months it cleared this high, got back in. 3 months it cleared this high, got back in. Okay, this one, when price got back in here, it used 4 months. 1, 2, 3, 4, 5 months it cleared the high. So we should be expecting that the first half of this year tried getting into this zone. Now the next half of the year should be clearing this high, which It's pretty fair. It's fair enough. So we can go to the weekly time frame. So there's something you all see. The markups, they don't move down to the lower time frame. Some of them. So like the other blocks we marked, they didn't come here. So how do we now implement the use of that other block here? We have to go and fix our lines. So come here on this one, on the top of this other block, I fix this line, and we can duplicate this one. We can duplicate it. Oh, not copy, I mean duplicate. So we can now come and place this one on top of this other block here, this one at the top of this other block also here. Yeah, so that's it. So that's it guys. So we can now go to the weekly time frame. On the weekly time frame, I won't want to touch the line. I'll leave it the way it is. Okay, so at the weekly time frame, you can see it's getting clearer. Now, what I do is I tend to, before I look at what is going on here, I tend to look at what has happened before. It helps me a lot to know what I'll be expecting to happen again. You get. So on the weekly time frame, if we look closely, let's see. Okay, we have this last bullish candle. Okay. Okay, so let's see. Okay, so basically on this one, I'm not really seeing anything clearly here which I'll be needing. So I'll go down to the daily time frame. So on the daily time frame, very good. I'll be using green to mark my next level. I'll be changing the color to, let's see, let me pick a dark green. Yeah, so I'll be using a dark green line. So now for this first push after this break of structure, this first push, what I can see is after price gave a clear break of structure here. I mean, this is our other block. So this was price breaking up, coming down and breaking up before dropping, and moved from here. One thing I can see is price gave a break of structure here, pushed up, came back down, respected this one and pushed up again. Now this other block here, this zone was free, and then this is where I would come and mark my zone. Now this zone is basically where we mark our daily order block. So we can come and mark the order block here, which really was the reason for this push to the upside. So this was the reason. You find your entry here majorly on this line, and then you find your entry here, and then you can catch it in. So you can see when price got in, it rallied to the upside, created a new structure, and boom, got to TP, which is fine. So that was the reason. This was the reason. A break and retest on this zone was the reason which created this buy to the upside. And let's just see the risk to reward ratio on this particular one. Estimatedly, we are putting, though I would have refined it, but let's just say we put our TP, our SL there. So the risk to reward ratio is 1 ratio 14 points. Okay, 14.6. That's fair enough. It's fair enough for a really long time though. So what I would have done here is I'll just refine my entry inside here, and then I'll take my trade. You get, so I'll refine my entry multiple times inside here, and then I'll take my trade. So after that, now we have the next red line, which is this one here. The next red line is here where we had a break, our order block. So now what am I going to be looking for? I'm basically going to be looking for our break and retest around this zone, which amounted to this reversal. So we have before price broke here, it's gave a break and retest at this point and then rallied to the upside. Was there any other break and retest? Okay, this one was not really the best, but then this was one break and retest that was very clear, which is this inside the order block. So this break and retest was a clear one where price reacted. So price got here, didn't get into the zone, rallied up, which is fine, and then came back to test the zone mainly, clearing those order here, and then rallied up a little, came back down, cleared this order here, and then rallied up fully. So that was the reason for this particular trade. Now basically there's another block here which helped those who would have taken this buy, which we can check on the smaller time frame and see if it gets to be clear. So that is it. You see, that's one thing I'm not really cool with. You mark a zone on the daily time frame and it doesn't show on the smaller time frame, which is not the best, but it's okay. So we have this line, I just marked this last block, which is a red candle, the last candle to the downside. I prefer marking that candle. So if I mark that, it shows okay. Wow, you can see price didn't really get to it. Let's look at it well. Now this would have been my order block. If I want to take it to the smallest time frame. But what we can see now is price didn't get into it. So where price reacted from is the other block on the okay, it just reacted from that line. It didn't even react from the other block. So price basically on this one, it didn't react from the other block. It did react from the other block, but on the higher time frame, it did react from other block on the higher time frame, which is like the daily order block, the full daily order block. So basically price got into this zone and then bought from this zone. So the zone is this one. Let me just show you the other block so you understand. So now for this particular entry, this particular trade reacted from the whole of this candle. It's a little big, so when price gets into it, one looks for an opportunity, and that was why price reacted multiple times from this whole zone, which is this last bearish candlestick, which gave us this break and retest. So that is the reason for this one. Now we have the next zone, which is this one, our next order block. We are now looking for where the price give us a break and retest before breaking this point, because this one was before breaking this point, and then this one was also before breaking this point. Therefore we are looking for another block here before breaking this point. So we go to the 4 hours time frame. Okay, so getting another block that gives me a break and retest before god damn it, I would have to go back to my monthly time frame chart and fix this properly. Okay, very good, because this is very important. Okay, so okay, so that is this zone. These are other block from here to the downside. So now we are basically looking for a break and retest in this zone, and then we can now plot our zone where we could be expecting price to react from. Okay, so on this one, it it's a bit relative in the sense that we have a break and retest here. We have a break and retest here, creating another block here, and also have a break and retest here. So we have a break and retest here, and then we have a break and retest here, which created which gives us another block here and here. So these are the two zones we are going to be making use of to find an opportunity for a buy. For me, I think I would want to work with this one because it has more probability for me as compared to this one above. Why? This one above broke above the structure before coming down to the other block. So this one basically is what I would want to use, not feel like using. But then we'll watch how price will react from this one, of course. Price could actually still get into this one and move significantly to the upside before getting to this one. But if price breaks this one clearly and comes to this one and react, then we should know that it's going to be a very quick push to the upside. You get? So that's it. So what we are expecting here, we are expecting price to give us some confirmations for sells. I'm currently in a sell though from here. If it does react without hitting my XL, fine. We run it down to this zone. But if it doesn't do that, it goes up, we'll find a zone and take the sell down to this zone here. So that's it in terms of that. So now let me go to the 1 hour time frame if I can find a proper order block for our entry. So on the 1 hour time frame, I don't know why all the other blocks are coming out on the 1 hour time frame, but it's fine. Okay. So on this one, we have my order block here. I like the 3 consecutive candlestick. This one gives me a 2 consecutive candlestick at the last point, which is this one. So this is my zone for a buy. Let me make the color a little bit I don't like that color. I'll use purple. Okay, I'll make it a little bit dark. Okay, I want the candles to show. Okay, so I'll use purple. So basically, when price gets here, I'm gonna be looking for a very, very aggressive buy. So one thing I'll do is I'll name this I would say it's a strong buy zone. So I want to do something I've not done before, which is invest a particular capital into this particular trade, risk all of that on this particular trade, and then hold it for a long time and see what the market is willing to give us from that. I already calculated using a $200 and I'm seeing 4,500 profit, possibly at the end of 2 or 3 months. It's fair enough. Okay, very good. So based on this, I'm actually going to be deleting the other block and all those extra things. We just use that to get our buyers. I've gotten our buyers, and then that's it. So this is where I'm going to be looking for my buy. Of course, I understand price will react from this point, push to the upside of that, but this is my zone for a strong buy. So we'll be going to the weekly time frame. Okay, let me see On the okay, good. So on this time frame, where would I have been picking my entries? I didn't really talk about entries. So now, using this particular trade here, where would I have been picking my entry? My entry would be at the top of this last bearish candlestick, which got into my zone. So if I were to be coming in for this trade, I'll be taking my buy entry here, and then my SL will be here. So the market's going to really give me what I'm going to be risking. Now, when I do this, take for instance, I understand price still dropped down, giving us a 1. It got to 1:7, but let's say we got it up to this point. That's 1:19. So take for instance, you're risking $100. I think if you're risking $100, you can basically times it by 19 times. You get, so you say 100 times 19. So basically, if you're risking $100 on this trade, you're getting about $1,900 when price hits TP. It's very cool though. One thing you can also do is you can scale in. You can scale in also. So another example. This is one example for an entry, which I would have taken. Another one which I would have taken is here. Let's see. So where would I have taken the next trade? Now price got into the zone. If I didn't catch the entry here, where I'm supposed to take the entry is exactly here, exactly at this price point, and then put my SL exactly at the low of this particular candle. And then price stopped me out. It pushed into profit a little and then came back to stop me out by this particular move, which is fine. Now we'll get the next entry. The next entry would have been here. Now this candle is really long, so I know I would have gone to the smaller time frame, 1 hour, to find a shorter bullish candle. But then using this candle, this would have been my entry, and then this my SL, and then this my SL, and then we still target also to the TP. Now using that particular format for your entry will help you reduce. Okay, this one is 1:7 because the entry is actually, the SL is large because of the candle, which I know I would have reduced on 1 hour time frame. So that way you can see how the whole thing is in terms of entry. So entry on this one, fine. Let's see how I would have entered on this particular one also. Okay. On this one too, would have entered using that same formula or method. So I feel like deleting all this. Let me see. So okay, well, let's just leave it here since it's not showing on the, it's showing on the 1 hour time frame. So I think that's the reason I want to delete them. It's alright, let's see how it goes. I won't be deleting it. I would watch the prices and see how price react to each and every line I've marked up. So this is it, guys. Do have a wonderful day. Peace out once again.